Hello and welcome to this very special show. As we wrap this year out, it's time to take stock of the year that's gone by, hits and misses. But we also, as always, look ahead into 2013, make some predictions and put out forecasts. To do that, to help us do that, we've got Ramesh Damani, member, Bombay Stock Exchange, a veteran really, needs no introduction. Ramesh, thanks very much for your time. Great to have you with us here.
Prashant, great pleasure to be here. Happy New Year to you and all your viewers.
Same to you. I just want to, we're calling the show from roller coaster to escalator. There's a question mark. Is it going to be an escalator ride 2013? What do you think?
I think so, and I think it's a very apt name you guys have come up with because, 2012 was a roller coaster in many ways, but if you stand back and look with hindsight, what did well, I think people assumed the worst in 2012, that Europe would fall down or that policy paralysis would continue in India, for example, or the US would go through its own set of troubles, have been proved wrong. The Dow was up. Greek bonds have doubled in value since the bottom. And of course, India's had a very sparkling rally through to the end of the year. So I believe that the next 12 months will be more of a smooth escalator ride rather than the rough and tumble or the worst fears that we saw in 2012. In fact, the early edition suggests that we're in a new bull market, Prashant.
And you've been sort of holding on to that view for a while now. I remember catching up with you in the beginning of 2012, and I remember I think you said towards the end of the interview, maybe we'll have a new high in US markets. That was beginning of 2012.
Yeah. Bit short of that.
Yeah, bit short of that, but I mean, it's worked out nicely.
It has, and I think the global liquidity is good, global confidence is good in equities. Yields are still 2.5%. You get the yields on Dow at 2.5%. So I think we're on track. Maybe we missed it by a quarter. Maybe by March we'll touch those new highs in the Dow.
The numbers 2012 are mind-numbing, right? I mean, $23 billion of FII flows, and market is up 30%. And it leaves us in a strange kind of a place where macros are still kind of sluggish. Nobody's sure whether things have bottomed out, but prices are up strongly.
But that's typical, Prashant, of a bull market action. Give you a more recent example. The RBI recently decided not to cut the rates. The market was some expectation that the rate cut would happen. It didn't happen. The market fell and recovered almost intraday session. Typically, market is shrugging off bad news and latching on to good news. And the headlines will typically turn good in the second phase of this bull market. So it's right now, perhaps in the early phases, whether we are or not for sure, we'll know only after a few months. But it is behaving as if we are in a bull market because it shrugs off bad news. Governor did not reduce interest rates. The market still went up. That should not have happened. Market should have gone down because the market tends to look ahead. The market is seeing that maybe not this December, but in January or February, rates will start coming down. Commodity price will start easing. Economic performance will start improving. So all these things point, and the price action strongly suggests that the lows we made in last December 2011 or in June 2012 are not going to be violated easily.
What stood out for you, just to go back, rewind to 2012, what stood out for you?
I think that you buy when there's fear and buy when there's pessimism on the street. I mean, July was a very tough time to be in Indian equity markets. There was talk of policy paralysis. The point is that sometimes at a price, everything is priced into the market. And I think the wise investor needs to understand whether bad news is priced in or not priced into the market. If you made the simple call that, yes, things are bad, but a lot of that is priced into the market, you probably did very well because individual stocks have doubled and tripled in the last 6 months. So you missed out on a great bullish run in the market for 6 months. If you wanted to wait for the headlines to turn positive, if you wanted for the sentiment to turn positive, it's always said in stock markets, Prashant, that either you get good news or you get good prices. You don't get both at the same time. So last year we had a surfeit of bad news, but you got good prices. Now we're getting better prices, and I think the news will change correspondingly.
You had two very distinct instances of rallies, right? One in early Feb 2012, when you had a very classic cyclical high beta rally. Again in September, when the government started announcing reforms, and last few weeks, some of that has been passed in the parliament. So very distinct episodes of...
It is, but it's typical of a bull market that starts up in fits and starts, then goes back, tests the lows, then comes back up. But here's the crux of the matter. I think what has happened is the IPO market till, say, November has dried up, or the offer for sale market was not there till November, for example. FIIs pumped in, as you correctly pointed out, $20 billion. And retail, despite everything, was selling. They were not buying out there. So the floating stock is now well absorbed. All right, the retail selling has been absorbed by the foreign investor, plus some more incremental buying, and there's been no IPO sucking the market out from the market. So there's only so much floating stock left in the stock market. So technically, when demand and supply are so mismatched, the prices are higher. And I think nothing's going to change in that. I think come the new year, again, fresh allocation comes to India. As long as the reform process continues out there, the mutual funds in India have been selling aggressively. At some point, they'll have to stop because they will be getting lower and lower percentages of equity holdings. So I think, it points to a buoyant scenario. And of course, now in February, market will start looking ahead to the budget, and we'll see what comes on that. But I think, given the policy indications of Mr. Chidambaram, that he is very conscious of equity markets, credit rating agencies, putting the economy back on the growth track. So my sense is he will deliver one of his more balanced, nuanced budgets.
When the rally started in September, a lot of people were saying that, well, this is going to run. Maybe we'll run till the budget 2013, markets will look good. And then, basically market goes sideways or either a sharp correction. We've got 4 months of this kind of market now, and in 2 months we'll get the budget. What is your sense?
My sense is we remain okay, Prashant. The undertone remains, fairly solid. Advanced decline line, price action, leadership in the market. Pharmaceutical shares are making new highs. Cement shares are making new high. FMCG has already made new highs and then corrected. So, the undertone of the market does not behave like this without some serious re-rating going on in the underlying economy. So, my sense is not a flash in the pan. Don't wait till the headlines turn positive, because then prices will be significantly higher. And over a long term, just let me share with you a broad number, that we expect India to become a $4 trillion economy over, say, the next 5 years or 6 years. We're at almost $2 trillion now. We'll double in size every 5 or 6 years. We typically will save about 20% of that money, which is almost like $1 billion, all right? The money can't keep going into fixed deposit, where you're losing money if you're benchmarking yourself against inflation, or it can't keep going into real estate. It has to start coming back to equity. So the little guy might be happy that his prices are coming back, he's selling out there, but I think they're probably making a mistake. There's only so many good quality, high, earnings company available in India. You can always get bad companies in an IPO, always get companies that dilute the equity, but companies that respect the equity will not dilute. There's only so many, maybe 200, 500 in a universe of 5,000. And those stocks will command a premium by the time this bull market is over. And you want to now step in and take part in that bull market because, once having started, it's very hard to terminate the bull market in between, in my opinion. So we'll know for sure whether there's a bull market or not, only with time. But my sense is what the technical indicators we follow in the market, the fundamental stories we follow, suggest that prices are headed higher over the next 1, 2, 3 years.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.